So let's discuss the amendments on business or profession chapter. In this note, there are two major amendments. One is regarding 43B, where in the Finance Act 2023, another clause has been inserted, that is clause number H. And another amendment is regarding presumptive taxation monetary limit. In order to go with presumptive taxation under 44AD, 44ADA, the monetary limit has been increased for those SSEs whose predominant transactions are in other than cash. So these are the two major amendments. So first thing I will cover with 44AD ADA related amendment, which is a very simple amendment. We all know the SSE can offer income under the business or profession straight away as per 44AD for all businesses except flying, hiring, leasing of goods carriage vehicles, for which 44AE is available. So except an SSE engaged in flying, hiring, leasing of goods carriage vehicles, all other SSEs can declare straight away 6% of turnover or 8% of turnover if the turnover is received in cash. If the turnover is received in other than cash, 6% of turnover as presumptive income. So the SSE can directly declare a presumptive income. So no further, no deductions, no disallowances, nothing. Straight away that is treated as income under the head PGBP. So we all know. Now, in order to declare like that, the maximum turnover the SSE shall have is 2 crore, maximum turnover. If at all the SSE is having more than 2 crore turnover, 44AD option is not available. Accordingly, if the SSE overall turnover is more than 1 crore, then he must go for tax audit. If at all the overall turnover is more than 10 crore, then also tax audit is required. If at all 95% of the receipts and payments are in other than cash. Are you getting it? Now, now you see. So a similar logic is introduced in presumptive taxation. So generally, what is the limit to go for presumptive taxation? 2 crore. And in 44AD, we all know once 44AD is chosen, next 5 years also we must declare like that. If at all we break the chain, 5 years we are prohibited to come for 44AD. So this all this provision and all, you know, and I also covered that in the marathon. Now let me discuss only amended part of it. Now, you know, this 2 crore limit is increased to 3 crore rupee. Not for every SSE, not for every business person, only for those business SSEs whose 95% of the receipts. Remember here, they are only covering receipts part. They are not covering payments. Why? In presumptive taxation, we are not worried about payments. We are only worried about receipts. Yes or no? We straight away declare income as a percentage of receipts. Straight away. Yes or no? So department want which criteria? Obviously to be very strong. Receipts only. So here, 95% of payments is not covered. So the transactions in receipts, the receipt transactions in cash shall not exceed 5%. In other words, minimum 95% of the total receipts must be other than cash. Here, payments is not covered. Please remember this. Payments is not covered. If you look at 44AB, the normal turnover is 1 crore. Suppose if 95% of receipts, 95% of payments, both are in other than cash, then tax audit limit applicable in this case is 10 crore. I hope you are aware of this. In this case, both receipts and payments in both of this 95% must be other than cash. Whereas in presumptive, 2 crores limit is there, right? That is increased to 3 crore for which SSEs? For those SSEs, if 95% of receipts, there is no payment condition. 95% of receipts, if it is in other than cash, the limit applicable is 3 crore. So up to 3 crore turnover, you can go with the presumptive taxation and declare just 6% or 6% or 8% as the case may be. Of course, 8% will not be possible. Why? Because majority of the receipts are other than cash, which means you just have to declare minimum 6%. This is the minimum income. And we all know, if at all you want to declare lesser than this, audit is required, all that. That's a different story altogether. Then, with respect to professions, with respect to notified professions, standard limit is what? 50 lakhs. So any notified professional, if is presumed, if at all gross receipts are not exceeding 50 lakhs, straight away he can declare 50% of the receipts as business income. Correct? Now this 50 lakhs limit is increased to 75 lakh. The 50 lakh limit is increased to 75. For which professionals? Only those professionals whose 95% receipts are in other than cash. Remember, that is minimum 95%. If 100% are in other than cash, well and good. But minimum 95 must be other than cash. And the same, whatever in the ICS study material is there, the same is reproduced here. Any business other than 44AE business whose total turnover or receipts in the previous year is not exceeding 300 lakhs, if aggregate cash receipts in the previous year is not exceeding 5%. For professionals, not exceeding 75 lakhs. Getting it? Actually here there is a slight mistake, ma. So whose gross receipts here, actually it's a diagrammatic mistake, is 75 lakhs. Getting it? So for those SSEs whose 95% of receipts, 95% of the receipts are minimum in other than cash, 75 lakhs is the limit. Normal SS is 50 lakh. So this is the amendment under business or profession. Just a minute. Yes. So that's it. So this is 75 lakh is the limit. Fine. I hope you are clear on this. Very simple. Nothing. No other changes in 44 AD. No other changes in 44 ADA. That's it. So here in the institute book itself, there is a mistake. It's actually 75 lakh. Standard limit is 50 lakh. But increased limit is 75 lakh. So institute, while copying itself, they made a mistake. But of course, they gave in the subsequent para clarification that 50 to 75. The limit will be from 50 to 75 if at all minimum, if the cash receipts are not exceeding 5%. So they clearly gave a clarification later. Fine. Next, then we have one more amendment, very important amendment, which is clause number H, insertion, 43B section. This is very carefully, you need to observe this amendment very carefully, because this clause number H, the treatment of disallowance for clause number H is completely different from clause number A to I. Getting it? From the remaining 6-7 clauses, whatever we have, this 8th clause is completely different. What is 43B? We all know. 43B means here whatever expenses covered under this section, like indirect taxes, interest on loan, bonus or commission, leave encashment, like this, payments to railways, so like this they have covered certain payments. One more payment which they have added is payments to, one more expenditure that is covered is payments to MSMEs for goods and services procured from them, purchased from them. Whatever, suppose if our business organization is purchasing goods and services from MSME, getting it? Now clause number H is applicable to us. So generally, what is 43B? What the section says actually? The section says, if at all any expenditure is incurred during the year, mercantile basis. So this 43B section is applicable only for SSEs who are following accrual basis, obviously. So if an SSE who is following accrual basis only, 43B is applicable. So if an SSE who is following accrual basis under income tax for PGBP purpose, all expenses you can claim deduction under accrual basis. Means if you incur, you can claim deduction. But 43B expenses alone, you can claim deduction only if those expenses were actually paid. When it should be paid? By 31st March? No. By due date for filing ITR. For due date for filing ITR under 139 subsection 1. What is the due date applicable? For companies and other persons for whom audit is applicable, or for a partner of a firm which is subjected to audit, for all of them 31st October. For transfer pricing cases, 30th November. Any other SSE, 31st July. These are the due dates that are applicable for filing IT return. So for a particular previous year, return has to be filed by 31st July or 31st October or 30th November. These are the 3 due dates we have. Within this due date, if you pay that expenditure, if you clear the liability enough, you can claim deduction on the accrual basis for that previous year itself. Suppose, if at all you paid that, you incurred expenditure in 23-24, but by 31st July, 30th November or 31st October, you did not settle that liability. You didn't pay that amount. You paid after the date. Then what is the actual year in which it comes under? That year you can claim deduction. You cannot claim deduction under the relevant year where it is disallowed. This point in detail, I clearly explained in the marathon. Please watch the marathon. Now, this clause number H, slightly different. In clause number H, what are they saying? See, MSMEs, there is a law. There is an MSME law. In the MSME Act itself, there is a point. For MSMEs, whatever goods and services you purchased, you must pay them within 15 days. This 15 days is called as appointed day. What is this 15 days is called as appointed day. So whenever you're transacting with MSMEs, whenever you're purchasing any goods and services from them on credit, you must settle the liability within 15 days if there is no written agreement. Suppose if at all you entered into a written agreement to pay the liability, maximum tenure is 45 days if there is a written agreement available. Suppose if at all you entered into a written agreement with MSME that you will be paying within 45 days, happy, you have 45 days time. If at all there is no written agreement, you just bought and you just have to pay. It's like a word of mouth. Getting it? So if at all you want to pay oral contract, you must pay the liability within 15 days. We call this 15 days time limit or 45 days time limit as appointed day. Now very simple. Suppose right now we are talking about which previous year? 23-24. Nothing but assessment year is what? 24-25. Suppose in previous year 23-24, March 10th, I purchased goods from MSME for 10 lakh. I purchased goods from MSME 10 lakh. Observe this example very carefully. This clause number H alone has a different treatment from the entire 43B. From the entire 43B, the treatment is different. For clause number H, the treatment is different. The section treatment is different. Now 10 lakhs I have. Now I purchased this on a written agreement. I purchased this based on written agreement. Okay, there is an agreement. 45 days time I have, which means I have time up to April 25th to settle this liability. April 25th, 2024, I have a liability to settle. Suppose, no, if I paid within April 24, what happens? You will get deduction for the actual year. What is the actual year? I incurred this in 23-24. I purchased the goods in 23-24, accrual basis. So for the same year, you can claim deduction. You already debited to P&L, no treatment. You are allowed with the deduction. Suppose if I paid on April 26th or later, if I paid this amount on April 26th or later, but you know what? I paid within the 31st October 2024. For me, the due date for filing IT return. For due date for filing IT return 139 subsection 1 for my entity is 31st October. You know, I paid somewhere on 10th May. I paid from the due date after 45 days. From the due date after 45 days, but I paid up. I paid it within the due date applicable for IT return. No problem at all. Still, you will not get deduction. Still, you will not get deduction for the 23-24 year. You paid on 10th May, right? Here, 10th May means what? What is 10th May? In our example here, in this case, what is the meaning of a 10th May? You paid the MSME, the liability, after 45 days of the agreement. As per the agreement, within 45 days you have to pay. Even without agreement also. In agreement, no. Suppose, no, if at all you entered into agreement, where agreement says 90 days time, that's invalid. With an agreement, if you want to pay, 45 days is a maximum criteria, credit period allowed. The maximum credit period allowed for the customers of MSME to pay the liability to the MSME is 45 days. That is a statutory limit. Getting it? If you pay within 45 days, whatever year for which you spent the money, right, for that year you will get deduction. If you pay after 45 days, you will get that as a deduction for the actual year for which it is paid. For example, I paid on 10th May. In our example, 10th May means what? March 10th is a transaction. 10th May is after 45 days, which means you will get it as a deduction under 24-25 previous year. Generally, remaining 43B section items, what, you know, payments to Indian assets, payments for using railway assets, payment of interest on bank loan, leave encashment, bonus or commission, taxes. In all these cases, what is the rule, you know, generally? 10th May, if at all you paid those payments, forget about MSME. If at all I made payment on 10th May, taxes or some interest on bank loan I paid on 10th May, or leave encashment I paid on 10th May, belonging to 23-24. We will just see, is it paid within the due date for filing IT return? Is it paid within the due date for filing IT return? Yes. So it is allowed as deduction for the same year. No disallowance is required. For all payments under 43B section, you will get deduction if the amount is paid within the due date for filing IT return. Though you incurred in 23-24, but you pay within the due date, enough, you will get deduction. If at all you paid after the IT return filing due date, you will get deduction for that year. But for MSMEs, what is the criteria that we see? We don't see IT return filing due date. We see 15 days criteria, 45 days criteria. Suppose, no, I purchased goods from MSME on 10th February. 25th March is the due date, 45 days. I paid on 27th March, but you paid within the same year, right? 27th March also comes in within the same previous year. Though you paid after due date, though you paid after appointed day as per the MSME law, but it comes within the same financial year, you will get deduction. But what if you purchased some goods and services from MSME and the amount is outstanding as on balance sheet date, and then you need to check whether that amount is settled to the MSME within 15 days from the transaction date or within 45 days from the transaction date? Check out. If at all it is paid within 15 days or 45 days from transaction date, you complied with the MSME law. You will get deduction for the same financial year for which you incurred. If at all you paid after 15 days or after 45 days from the transaction date, you will not get deduction for that financial year. If at all the amount is outstanding as on the balance sheet date and you did not pay within the 15 days or 45 days, you paid after that, and that date comes under the next financial year, you will get deduction for the next financial year. For that itself, we have given an example here. Mr. A purchased goods worth of 10,000 from A and Co, a MSME, on 1st March. As per the written agreement between them, the payment has to be made by 5th May. In the written agreement, no, they only have given 35 days time. They only have given 35 days time. Getting it? Maximum time is 45 days. If there is a written agreement, as per the agreement time period you have to pay, or maximum worst case 45 days. Suppose if the written agreement contains 90 days, then agreement is not valid. 45 days only considered for law purpose. Getting it? So 35 days only you have to pay. Mr. A follows mercantile method of accounting. What is your answer? He is following mercantile. So he incurred expenditure for which financial year? 23-24 accrual basis. But can he claim this as on 31st March is outstanding? He, as per the agreement, 5th May he has to pay. Suppose he paid on 2nd May. Sorry, 2nd April he paid. 2nd April means he paid on or before the agreement date, right? As per the terms of MSME, he paid, right? The deduction will be allowed for the respective year. Suppose he paid on 20th April. Since he paid after the due date mentioned in the written agreement. Since he paid after the due date mentioned in written agreement, for that respective year, he will not get deduction. Mr. A paid the amount beyond the time limit. So deduction would be allowed in the actual year of payment, 24-25. Therefore, for previous year 23-24, that expenditure will be disallowed and that expenditure will be allowed as a deduction in the previous year 24-25. Getting my point? Now, what is a micro enterprise? Investment in plant and machinery, if it is not exceeding 1 crore, turnover is not exceeding 5 crore. Small enterprise means investment in plant and machinery is not exceeding 10 and turnover is not exceeding 50 crore. So you see, and remember here, medium enterprise is not covered, only micro and small enterprises are covered. Medium enterprises are not covered, but actually the law is micro, small and medium enterprises, MSMED Act. So only 2 enterprises are covered, micro and small, only these 2 are covered. So any sum payable by SSE to micro and small beyond the time limit given under section 15 of MSMED Act would be allowed as deduction only in that previous year in which it is actually paid. If that previous year is same relevant previous year, no problem, happily claim deduction. If that previous year comes after the relevant year, then for that year you will get deduction. Now section 15 of the MSMED Act, it mandates payment for goods and services to supplier who is an MSME. MSME by the buyer on or before the date agreed between them in writing, that is as per the agreement, which cannot be more than 45 days from the acceptance or deemed to be acceptance, nothing but which cannot be more than 45 days from the transaction date. So through agreement, you can have a lesser duration, lesser days or maximum 45 days. Getting it? If there is no such agreement, if at all there is no written agreement itself, then the payment must be made within 15 days. That 15 days is called as appointed day. If at all some payable, if at all any amount you have to pay to a micro or small enterprise, if at all it is paid as per the agreement within 45 days or within 15 days in case there is no agreement, you will get deduction on accrual basis if mercantile basis is followed. If the sum is payable to MSME is not paid within the agreement date or 15 days, then the deduction would be allowed in the previous year in which it is actually paid. Suppose year beginning I did a transaction, 45 days later I paid, but in the same year I paid. I will get deduction for the same year. But year end, the amount is outstanding. Transaction happened in the year March month, but the amount is outstanding on March 31st and you paid in the April or May month. But if it is coming within 45 days or 15 days as the case, maybe you will get deduction on the accrual basis. If you pay after the 45 days or 15 days, you will not get deduction for the respective year. You will get deduction for the next year. So this is the major amendment 43P clause H. So try to listen to this particular part of this video once again so get clarity. Remember 43B clause H, for that alone due date means what? 15 days or 45 days as per MSMED law, not due date for filing IT return. For remaining all other payments that are covered under 43B, you incur expenditure in the current previous year, you have to pay that, you have to settle the liability within the IT return due date. If you settle it, you will get deduction. But for MSMED payment only, not IT return due date is the cutoff. The due date is 15 days or 45 days is the cutoff. I hope you understood the difference. You found the difference between the remaining 43B payments and this payment. Next. And whatever remaining amendments, whatever I'm showing you here are just 115 BAC, 32 section under default tax regime. No, if at all you're going for default tax regime, no, you cannot claim additional depreciation. And you cannot claim deduction for contributions to scientific research association for scientific research, to a company for scientific research, to a research association for social or statistical research, to a national laboratory, IIT, universities. You cannot claim deduction. But remember, you can still claim deduction for in-house research, for revenue expenditure, in-house research, for capital expenditure. For these 2 sections you can claim because you are spending on your own. You can claim deduction for spending on your own. You can't claim deduction for contributions. If possible, no, open ICA material and solve illustration 5 on this. It's very easy illustration. Okay. And remember, in the new scheme study material, there is another section called 35(2)AB, nothing but expenditure incurred by an Indian company on scientific research, which is engaged in biotechnology business. That section is removed. In the old scheme material, it is there. In the new scheme material, it is not there. But whether this section is there now or not, it doesn't make any difference, because 35 subsection 1 clause 1 is also dealing with the same 35(2)AB. Once upon a time, 4 or 5 years before, no, 35(2)AB has some relevance. Now there is no relevance. That's why Institute removed it from the study material. Next. 35AD, same 35AD, here this is just a clarification purpose. I kept this clarification purpose. I kept this. I think most of you probably know this. Okay, 35AD is what? Under default tax regime, you cannot claim 35AD deduction. If at all you want to claim 35AD deduction, default tax regime 115 BAC will not apply. Further, alternate minimum tax provisions 115 JC, all that is applicable. Next, and we all know the loss of an SSE who is claiming deduction under 35AD, that loss can be set off against another specified business, even though it is not eligible, irrespective of whether the latter is eligible for deduction or not. So whether 35AD, so suppose you have one business that is not eligible for 35AD deduction, but that business falls under that 14 list, you can still set off. So whether you follow, the default tax regime scheme or not, doesn't matter, you can set off. But of course, if you follow default tax regime, you can't claim 35AD set off. Suppose this year, for example, this year, it's okay, leave it. Let's not make it complicated. Enough. That's 35AD. Now look at the supplementary material 35D. Very basic provision. It's not a big deal. In the supplementary material, they have added this. A notification came on 1st August 2023. Remember, all the amendments up to 31st October are applicable for May 2024 exam. So 35D, what is 35D? Preliminary expenditure. Preliminary expenditure can be claimed by domestic company as well as a resident Indian citizen, if at all they incurred for starting the business or expansion of the business. Whatever expenditure that qualifies for preliminary expenditure, 5% of the cost of the project or 5% of the capital employed, whichever is higher, like that, some points were there. So that amount, you can claim it as deduction in 5 installments, right? Now, in order to claim a deduction, you did a CA certificate. CA has to certify this. Further, you need to give some documents. As per 35D, the SSE has to furnish a statement containing particulars of the expenditure. How much for feasibility report, how much for project report, how much for market survey report and other survey, how much for engineering services. Like this, you need to give some documentation to the department. What documentation you should give? You should give this documentation to the department. So that's what the notification says. Technically speaking, from exam point of view, not a big deal. This is not a big important amendment at all. So in PGBP, this is not a big amendment or not an important amendment, but which is covered in the supplementary material. So only if you submit all these statements, you are eligible for amortization within the prescribed period. So you are eligible for amortization. You are eligible to claim 5 installments deduction only when you give these information to the department. So accordingly, Central Board of Direct Taxes, they have inserted a rule 6A BBB to prescribe that the statement containing particulars of above expenditure is required to be furnished 1 month. When you have to furnish 1 month prior to the due date of furnishing of the return of income, nothing but tax audit due date. This is something similar to tax audit due dates, 30th September maximum. Generally, it is 30th September. Or if at all you don't have a tax audit, then 30th June, 31st July is the due date, right? If you don't have tax audit, 31st July is the due date. 1 month prior means 30th June. So you need to submit this information to the department within 1 month. 1 month prior to the due date for filing IT return, you must submit. Probably this might be tested as an MCQ. Maybe, we don't know. This might be tested as an MCQ. This 1 month point might be tested as an MCQ. I don't think so. But if at all tested, you will not be missed. So with this, PGBP amendments are over. Next, we have capital gains related amendments. Capital gains related. That's it. This is PGBP.